you've done your homework, I think the key is just create a relationship with the banker. I mean, we're all people, right? It's at the end of the day, your banker shouldn't be scary. It should be one of your colleagues, one of your friends, whatever you want to call it, your trusted advisors that you can lean on, you can ask questions, almost consult back and forth. Bankers are always happy to do that.
Are you looking to grow your real estate business in 2023? If so, podcast guesting may be just what you need. To learn more about podcast guesting and how it can help grow your real estate business in 2023, go to podcastingu.com/syndication to book your free discovery call. This is your daily real estate syndication show. I'm your host, Whitney Sewell. Today, our guest has 15 years of experience as a seasoned banker. It's interesting. It's just a great conversation around his background and the perspective that it brings into our industry, but just a big background in finance and real estate and sales professional, proven track record of success. His name is Brian Tobler. He has a solid production history demonstrated by the ability to source, analyze, and execute a variety of commercial real estate deals. And you're going to learn a lot from him today. I just got to go ahead and tell you, he was a financial analyst for the government and then a bank examiner right through the 2008 crisis. And so, he's going to have a different perspective, right, than many that we have on the show. So I enjoyed that, and I hope that you learn a lot today. It is interesting to hear from different perspectives in our business, right? There's different fields who, as an operator, I want to know how they see me as I come to work with them, right? Or as we partner on deals, whatever this may be. But today, this perspective comes from a banker, with lots of experience and now even an active experience in our business. Brian, welcome to the show.
Thanks for having me. Good to be here.
Yeah, honored to have you on. I'm looking forward to learning from you and the listeners learning from you as well. Give us a little more about your banking background, finance background, and then we'll move towards, now your active role in this space as well.
Yeah, so just a quick synopsis on me. I largely began my career with the government as a financial analyst and moved into being a bank examiner through the Great Recession, if you will. So I was able to see a lot of different deals as a bank examiner and a lot of different banking institutions that struggled through that downturn. So it kind of gave you a different view of what happened from the financial institution perspective there. After that timing, I pivoted out of that into commercial lending. I was been in commercial lending for the last 9 years. I've done hundreds of millions of dollars in deal flow to largely real estate investors in the Denver metro area. So anything from ground up construction to commercial real estate, retail, industrial, hospitality, multifamily, kind of the whole gamut. So I've seen a lot and still have a lot to learn. Nobody knows everything. So happy to always learn from others, but bring my perspective and what I'm good at and what I know. So
yeah, that's interesting. I would love to hear maybe some lessons learned or a couple examples or stories that, being a bank examiner during that time. And what did you take from that you're able to apply right now?
I think the key there is, the market always has cycles and, sometimes even banks get confident in lending and in giving out debt that maybe shouldn't be given out, or sometimes sponsors or borrowers push banks to do certain things. But I think the wisest approach is for the not only the borrower, but the bank both to feel comfortable with the leverage and what they're doing, make sure that it's underwritten conservatively, because I think what we saw then, at least here in Colorado, was there was a lot of development deals, land deals that ultimately failed. And when you have to sell those for 30 cents on the dollar and you're talking tens of millions of dollars, it bleeds the capital out of the bank literally almost overnight. If that value drops that quickly. So I think that's the key, is just going back to the fundamentals. And all get a little excited. The market's hot. We're going to miss out. We all get a little greedy at times. And I think that's where we have to catch ourselves and say, hey, does this make sense? Is it underwritten fundamentally right? Are we protected both from the investor standpoint as well as from the financial institution standpoint? Because the capital stack, has to make sense for everybody, right? So
it does. Yeah, that's interesting. It's just, I don't think I've had, I have this many interviews. I've never had someone on the show. I don't think that was a bank examiner specifically during that time as well. So that's just an interesting take, and that, like the first thing you think about for the wisest approach is really that LTV. Is that accurate? And ensuring both sides, the operator and the lender, feel good about that loan to value, that we're not over leveraged.
Yeah, I think loan to value and then just making sure the cash flow is there, right? Because I think, especially for developers, if it's an operating existing asset, it's stabilized, that's a little bit different than if it's, you're buying land to develop and you're buying more and more and more because you want something in the hopper so you don't run out of inventory, right? And that's when you can overstretch and really kind of have a bad day or month or a couple years. So,
Yeah, a few years, many years.
yeah, work out of it.
It's great to hear that perspective and just think through that and how we can apply that right now. Speak to though, after this many years now in banking, and we'll try to do both sides of this given time that we have. But first, the operator coming to you, the lender, help them to be better prepared than normal, better, just equipped, to work with you as the banker, being in their shoes. What were some of the best examples maybe, of the operators that came to you that, man, you were like, okay, this operator's got it together. This is somebody we want to partner with. What did they do that made them stand out in that way?
I think the best operators and the folks that the bankers appreciate the most, and obviously being on the investor side too, I have to keep this in mind as I push forward and turn to banks for debt as well. But I think it's having your package clean and orderly. So if you have your underwriting that you can submit with your pro forma, you have your property and project information all laid out very clean and orderly. You have, the overall financial package, whether that requires a personal financial statement, the tax returns, the rent rolls, depending on whatever property type you're doing, and then a resume or something that kind of lays out the experience, depending on how long you worked with this banker. But if you're new, you're going to need it all, right? And they're going to have to get to know you. So bringing all that in a Dropbox file or in some way that the banker can get it, read it, review it, and make a quick decision on, yes, we think this is something we can pursue with. They can get it into their team, into the underwriting a lot quicker that way. Everybody comes out happier than if it's piecemeal together. And occasionally, yes, the bankers are going to come back and say, hey, we need more, or we need a little more on this or that. But I think that's a huge start. Kind of not that you're going to treat them any differently, but if somebody comes unorganized or they're missing a lot of the material or their financials don't add up or something, it starts to raise red flags. And then that hurts their chances, honestly, of getting through quickly. So.
Yeah, for sure. Now, you laid out a number of things there too to have together in that package, that you talked about, and no doubt about it, that just makes it easy, makes it show that they've done their work, their homework, right? Before they've come to you. Yeah, they've educated themselves, hopefully, about the asset class, but this specific asset they're coming to you about. What would you say about someone coming to you maybe before they have a deal, right? Just to develop the relationship and discuss, their plans. Is there a way that you even like to see that presented? Maybe even before they have a specific project in mind that they need lending for?
Yeah, I'd say one of the best ways is usually bankers are pretty willing unless they're just totally overwhelmed. But if you can get them, out to some sort of a coffee meeting or a lunch, sit down with them, get to know their personality, and then talk through what you're doing. It's not rocket science. It's just more of, hey, these are my thoughts, these are my ideas, this is what I'm doing. I'd like to come to you for this type of financing. Does this make sense? And then, maybe do a little give and take of feedback from the banker and vice versa. So you can kind of fill each other out what that looks like. That helps you to meet in person or even if it's a Zoom call or something, if it's unable to be in person. So they know who they're talking to. And then when they do come back with a project, the banker can be a lot more confident and excited about, hey, I know this person. This isn't just somebody that randomly popped out of the woodwork and I have no idea where they came from. Because quite honestly, a lot of banks will say, hey, was this a referral from another existing customer? And if it was, it's usually a little easier to get them in. If it wasn't, it's like, well, how did you get to know them? Where'd they come from? What's their experience? What's their background? So all the things that the bank's going to want to know.
Yeah, for sure. I want to make sure we have some time to really talk about, the opposite side of this coin a little bit, and even you going into the active side of this business now. But anything else you would like to leave the listener with as far as from the banker's perspective, you're sitting in the banker's lender's seat, right? Working with an operator. What else would you say? Hey, they need to make sure, you all know this, or before you have this meeting or this deal, whatever it may be.
I think if you've done your homework, I think the key is just create a relationship with the banker. I mean, we're all people, right? It's at the end of the day, your banker shouldn't be scary. It should be one of your colleagues, one of your friends, whatever you want to call it, your trusted advisors that you can lean on. You can ask questions, almost consult back and forth. Bankers are always happy to do that. I mean, most bankers are on a salary, so it's not like they're losing money to talk to you. And then from there, it's obviously they want to get deals because that's how they're compensated. So they want to make sure that they're dealing with people that are really going to come with a full package and be able to fulfill their side of it so the deal can get closed. So.
Yeah, no, it makes complete sense. Well, speak to your decision to leave that industry now, and go in more of the active route. Your thoughts behind that. I guess why you feel that good about our industry and our multifamily, whatever asset class it is you're focused on.
So I'm kind of spiraling right now. I'm in a little bit of the brokerage role. I'm currently not in a banker seat. I do have banks that are interested in wanting to hire me, but I'm trying to decide, what do I what do I do with my time? And a part of that is taking more of an active role in the investment community, getting involved in more in conferences, masterminds, meeting people, helping people. So I think the biggest difference is I was able to see some syndicators information internally, and it kind of opened my eyes to, wow, this can be a really lucrative career path. And not only that, but you get to help a lot more people than, if you're just helping each operator as they come. There, those deal sizes, you can help a handful a year based on dollar volume, but you can help a lot of people if you become a syndicator, especially, multifamily or storage. I mean, people need units, right? People need a place to live. A lot of folks are looking to deploy their money. They have 401ks and they're like, well, this isn't getting there. They work hard, they do good in what they do for work, but they're trying to figure out other solutions and other alternatives to invest their money. And I think that's really what lights me up, is getting involved in hey, helping people raise the capital, get it into deals so they can make their money work for them.
Yeah, no, it's interesting. It's different to hear different people leaving maybe what a lot would see a secure long-term position, right, to move into this field. I did the same thing, and I started with government many years ago, but not in the financial world by any means. But that's interesting. Speak to your growth now, and even your you moving into the active route. How did you determine, hey, I'm confident enough to do that, or educate yourself? How did you start growing in this way, and your plan moving forward?
Yeah, so I started reading. I think the first place for most people is you get material, right? You start educating yourself, start reading, start watching podcasts. You get involved, more involved in the community, and then as you do that, you get more knowledge, you get more confidence of, okay, well, this is maybe my path. Because there's a lot of different paths a person can take. You can partner, you can do your own operation, you can be a capital raiser, you can do funds. There's a lot of different approaches you could take in this industry. So I think that's where I started. I mean, I jumped in and started educating myself, started networking. And the more I did that, I was like, well, man, I really enjoy this. It's what I'd like to do more of. It kind of speaks to you, so to speak.
No doubt. There's so many ways to educate ourselves, and so much free information now too. I think, man, you do have to jump in and make some stuff happen, meeting some people. And one thing before I forget, I meant to ask you was back kind of on the banker conversation a moment, but how do you know which bankers are going to be the ones to help you get the deal closed, right? So you're not spinning your wheels, really with the wrong lender as well. Any thoughts behind that?
That can be somewhat tricky, because some sales professionals, they will talk it all up and then they don't fulfill it, right? It's kind of all talk and no action. But so I think it boils back down to whatever markets you're going to want to operate in. I think that is part of your due diligence, not only for yourself, but your investors, of saying, hey, I need to get a list, and I need to interview some bankers, and I need to get word of mouth, probably the best referrals, right? Of talking to other operators. Who do you use? Who's been good? Who will fulfill what they say they'll do? Who gets deals closed and doesn't retrade or do weird things? And there's always circumstances, things can happen, but I think that's the best way is the referral sources. And then if it's just, hey, what banks are lending on CRE, you call them up and you just start drilling down and you get them to go to lunch with you or, and, have the banker buy you lunch. Can't speak there. So you get a free lunch out of it, and they're happy to. They're looking. That's their job is to grow business development, right? Just like anybody. So I think that's what you've got to do. And I think I would say have two or three. I think one primary guy, but have maybe a backup or even a third that's in the market. So if for whatever reason that bank is full on that type of asset for the year for the budget, then you have another one or two guys that you can lean on to get the deal done.
For sure. Have more than one in your pocket. From your experience, I mean, you're a bank examiner and a lender, yourself for many years, now going active. From what you learned, which asset class are you focused on and why?
Right now, I'm primarily focused on multifamily. That tends to be where a lot of my network is. Not that there's anything wrong. I like storage. I like multifamily. I like industrial. I've personally invested in both multifamily and industrial. So I think any asset class can make sense. But for me personally, right now, I'm mostly geared towards the multifamily space. And I would say there's a lot of properties out there. There's a lot of activity going on, and it's just where I see opportunity. So it's kind of you have to any asset class can be good. You just want to make sure you understand it and the underwriting is solid and it's making sense. So
how are you mitigating risk now, just in the economic climate that we're in, even from what from previous experience, other than, having the LTV that you feel good about, like what are some other things that, from your experience too, it's like, okay, I know we should be doing these things, or if I'm partnering with an operator, these are some things I want to see in place or them doing or in our deals or, whatever.
yeah, I think there's a few big things that I guess that we all need to be aware of. And I think the first thing that I look if I'm going to partner with an operator in particular is I want to see communication that's consistent and that's good, that's timely. Second, I want to see that whether it's me or them, if I'm doing my own or I'm partnering with somebody, that they've vetted the location, right? That they understand the market and that the locations that they're looking to buy assets or the ones that they're underwriting are in a good location because you can't trade the location. So once you buy the asset, it is where it is. So I would say location is very, very important. That's the age old phrase, right? Location, location, location. But that holds very true in the marketplace and it draws a certain, I guess, person to the property, if you will. Again, it's the fundamentals. Hey, do they underwrite? Are they conservative? What are their assumptions? Are their assumptions realistic and reasonable? Are they stretching to make numbers look better? Or is this just, hey, this asset cash flows day one, we can go in, this thing makes sense. Anything we do to force appreciation is just really just that value add, right? We're not having to like really, really heavy lifts. I think people need to really know what they're doing because in a lot of cases, those won't cash flow on day one. But if you know what you're doing and you get in there and you've got a good team that can still make sense. But yeah, just kind of nothing earth shattering, right? It's the same old fundamentals that happen in a process of taking down an asset. But I also say the experience of the operator in a partnership basis of, have they gone full cycle? What did their other properties look like? What were the results? What did they tell their investors? And then how did that end up coming to fruition? So,
yeah, no, that's a great list of items there. No doubt about it. And we hear some of those often for a reason, right? One, they are important. And two, they've been proven to maybe have not been done many times by many investors, right? Or operators. So it's good. We can't hear those things too many times, I believe. But, Brian, do you have any predictions just for the economic market or real estate market over the next, 6, 12, 18 months?
I don't really have any strong predictions. I think that we all kind of know it's going to be a little more challenged. So, obviously the debt markets, the interest rates are high and any floating debt has to be thought about cautiously and carefully as far as what that looks like from a cash flowing perspective of the property. So even if it's an interest only, bridge loan, yeah, if you don't have some sort of cap on that or some sort of reasonable timeline, that could squeeze the property. So it'll be real interesting. I think there will be some distress. I think we're seeing that coming out in some of the news articles, some of the research that's hitting the news is saying that, some distress is already starting to hit the market, and that'll really determine kind of operators. Because I always like to say we all look like heroes in an up environment, right? Bankers, operators, whatever. Everybody looks like a hero because the appreciation of the market, debt's cheap. We can just sling deals and it can turn and burn. But now that things are leveling out and debt has gone up significantly, I think it's gonna change the game for a lot of folks, and we're gonna have to really be thoughtful about kind of the underwriting assumptions surrounding that in particular.
Yeah, the last thing we want is a bank examiner to be having to look at our stuff. Right?
Yeah,
So,
that's never good.
what's a way you've recently improved your business, Brian, that we could apply to ours?
A way that I've improved my business. Well, I don't know if I have a great answer for that, but I think the way that I take daily action to improve is to continue to learn and grow. I mean, I don't think there's a better way than just personally to learn and grow and kind of learn something every day, right? Whether that's reading, watching something, taking something in, networking with people. I think there's just so much out there. Sometimes it feels overwhelming, right? I'm like, man, I have so much to learn still relative to what's out there. But I would say that's the number one thing for me is that growth, learning, and consistently improving myself so that I can be better for those that I'm serving. So
Awesome. What about your best source for meeting new investors right now? What would that be?
best source, man, there's a lot. I think the quickest way if you want to start to meet a lot of people is to attend conferences. I mean, that's just jumping in the deep end. You can't be a wallflower. Just get off the wall, shake hands, talk to people. Everybody's there for the same reason. So, you shouldn't hesitate to just talk to whoever you can and get to know them, what they're doing, see where you can add value to them. Another way is obviously LinkedIn. There's so many professionals out there. You kind of see their background, you see what they're about. You can message them, get to know them, especially if they're in obviously different markets. So those are two great ways. So,
What about your best advice for passive investors?
I think the best advice I could give is make sure that you understand what the active partnership or operators are doing as best you can. I mean, you're not gonna know everything, but you should have a good solid understanding of, hey, this is what we're investing in. Here's the numbers. Does this make sense? And then obviously feeling comfortable with their history and their track record. So,
What are the most important metrics that you track? Could be personally or professionally.
boy, you caught me red-handed. I could be better at tracking, honestly, but I think the metrics to track really for me, I think boil down to financial metrics. That's kind of proof in the pudding that you're doing things right. So whether that's you're growing your rents in a property or you're growing your revenue. I think the most important metric though is profitability because ultimately that's what pays us all. You could have all the revenue in the world, but if you're just breaking even, that profit margin is huge. So and then just personal goals. I do have goals. I write those goals down and I track those. So I guess to me that is a metric of how am I tracking my goals? How am I doing with those goals and reviewing those regularly and making sure they're written. So
What's the number one thing that's contributed to your success?
I think it's a combination of just being diligent, being hungry for reaching those goals, and then just being somewhat conscientious. I know that's some people get success by not being conscientious. They just go for it. But for me and my career path, I think you have to be conscientious and think things through, look at the risk, but then still take action, right? So ultimately you got to move that needle forward. So
And how do you like to give back?
I donate a fair amount. So I give back through service, primarily I'd say through my church and then financial donations too. I'm consistent at doing that. So
Awesome. Brian, it's been a pleasure to meet you and have you on the show. I've enjoyed, being able to tackle it from the perspective of a bank examiner, but then also a lender. That's fun. I can't say we've ever done that. 1,600 shows. So grateful for your time and to meet you. Tell the listeners how they can get in touch with you and learn more about you.
Yeah, so to get in touch with me, I think the two easiest ways is my website, toblercapital.com, or LinkedIn. You can find me under my name, Brian Tobler. Get my background, my history, all is all there. So those are probably the two easiest ways.
Thank you for being with us again today. I hope that you have learned a lot from the show. Don't forget to like and subscribe. I hope you're telling your friends about the Real Estate Syndication Show and how they can also build wealth in real estate. You can also go to lifebridgecapital.com and start investing today.